All right. I hope everyone had a nice week. Going to do a video update here on Bitcoin as well as the miners. So I'm going to use Mara for the miners and then look at a relationship between Bitcoin and the Nasdaq. Going to stick to mostly high time frame here because I think the low time frame is just it's just a lot of noise right now. At the end of the day, nothing has really changed. I'd love to come back and report that my views have significantly altered or I'm looking at things differently. But that's just not the case. In fact, it's the opposite. When I see traditional financial markets are entering price discovery and the types of moves that we're seeing in uh, the traditional equity markets, that only validates my findings and thesis and conviction on what's to come and what I believe is the next major move. And let's be very, very clear, we haven't had any move. We haven't had any move. I've been looking for all-time highs uh, for the last couple months, but we haven't had it, right? Let's just call a spade a spade. We haven't had it, what else have we not had? What we haven't had is any significant break in the structure of the market. We haven't had any price acceptance below 40K. We haven't had a lot of what I've seen in folks kind of changing their biases, some folks changing their biases because of day-to-day price action. But when I zoom out and I look at a weekly chart, this is a chart that I've been presenting to you folks for a while. And just a reminder, this isn't financial advice. I'm not a financial advisor. Do your own research. Just use this as educational purposes, right? Whether what I'm talking about comes to fruition or not, if you're a spot holder, it shouldn't matter. It shouldn't matter whether this happens next month, the following month, 6 months, a year, 2 years. Anyone asks me about, my thoughts on investing in Bitcoin, I say, as long as you've got a 4-year time horizon, um, then your minimum expectation should be some volatility. But the fact is, we haven't even had volatility to the downside, right? And when we look at the price action over the course of the last 2 months, we've simply been consolidating in a vertical type of accumulation structure. That's it. Let me zoom in on that a little bit more and just kind of visualize where we're at. And we had this basically liquidity sweep with our ETF sell the news dump. Then we had another little liquidity grab, beautiful candle close on the weekly, right? You've got that nice type of hammer candle. Typically indicates a reversal pattern. You like to see those at the end of downtrends, and we did. This week we are seeing continuation. So far we're seeing continuation on that reversal candle. Obviously, kind of a confirmation is would be a weekly close, a green weekly close. And so, but all that aside, we literally have had a lot of people changing their views when nothing has changed. Remember back in November, wait, when were we at this price first? December 4th. Remember how exciting that felt when we got up to 43,000? And and now what happens? It's the same story. It's the same thing we saw in this price range over the summer. Remember that feeling when we first busted through in March, this 25, 24, 25K level? But then remember that feeling when we came back down to test it, and then we came back down to test it again in September of 2023 when it's over, right? It's over. And as I was doing videos back then, I was saying we get max bullish the closer we get to support. We get max bullish the closer we get to key critical support levels at 40, 38, 39K. And so the shift in sentiment, quick shift in sentiment, quick shift in emotion, that just tells me the market continues just to be off sides and trying to trade in and out of this thing, and there was a lot of people, I'm sure, that sold this 48, 49K level, thinking that that's a pre-halvening top and looking for, something down here. And I just don't think they're getting it. I really don't. I don't think they're going to get it. I don't think they're going to get entries that they're satisfied with, and I think the market is just going to leave them behind. That's my opinion. I don't know what's going to happen. That's just my opinion. And so let's just take a look at that the weekly count. And again, nothing has changed. Now, what changes? What material changes would need to occur in order for this structure to then warrant reconsideration for me in terms of expecting major upside next? Well, let's just look at the principles of these wave movements, okay? Principles of these wave movements. And when you see, let's just kind of start back to, we'll just look within the context of what I believe the current cycle is, which we're still in my opinion. And that began here in 2019. We had this 1 to 2, right? Okay. And so that's, the least steep. And then you've got your 2 to 3. Okay. And then you've got your 4 to 5. And so this is how Bitcoin has traditionally moved through its impulsive patterns. That's why they call these kind of parabolic, right? These little blow-offs within the context of the larger counts. These impulses are like mini blow-offs. And so what do we see in the next impulse? That 3, I'm claiming this is primary 1. This is primary 3 that ended in the spring of 2021. And so, that first minor impulse, right? The least steep, that, from that second to the third, it gets incrementally steeper. And then, the steepest is to 5. And so that's traditionally how Bitcoin acts when you kind of, and what these waves are, and these primary waves and these sub waves within the primary waves are just pieces of the broccoli, right? You're taking one piece out, it kind of matches the bigger piece. And so the expectation here would be, if I've got this count, if I've counted this correctly, which again, nothing has been invalidated yet. The count has been going according to plan. The coming out of the primary 4 and, subwave 1, 2, okay, that's the least steep movement. And then we have, right, it gets incrementally steeper as you get closer towards the end of that impulsive wave that you're in, right? The end of the impulsive wave, it's going to get steeper and it's going to get shorter in time. And so what invalidates this? Let's take a look at that, because I get asked that question a lot, and it's less about price as it is about time. Okay, so let's just say price went sideways for, let's just say to June. Okay, we're just going to say to June, and we're not even going to say we're in this exercise, the premise isn't even that we're going to dump down to 34. I'm just saying sideways. Literally nothing happens. Sideways, chop, 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 chop into June. Then I've got a real problem with the way that this count, and in my opinion, I've counted this incorrectly, because if we made 2 here, okay, sub 2, and the next move is into 3, the expectation is that this wave is going to be steeper, right? It can't be that same angle. It hasn't traditionally. That would be very uncharacteristic, very uncharacteristic. And so that's really what would invalidate it more for me. I mean, from a price standpoint, you know, any wicks down, you know, from an Elliott wave standpoint, anything down to you know, the low 30s still doesn't violate the count, but it would just need to be just a massive quick recovery to keep the angle of this intact. And so at this point, even that would be far-fetched. Even that would take our time out too far for this angle to be sufficient for where I'm claiming we are in this cycle. So what it comes down to, folks, is it's time, right? For this count, for my belief, for my thoughts on where we are in the cycle to come to fruition. It's time. It's time for it to move. It's time for it to move quickly, sideways for another month or two, and I'm wrong, right? You've got this on video. You know, materially down, you know, and hanging out in a prolonged correction, and I'm wrong, right? That's just calling it what it is. But none of that has happened yet. None of that has happened yet. We have not materially closed. We are still literally, let's put this into perspective. We are off of yearly highs. We are 12% off yearly highs. 12% off yearly highs after coming off the lows. 217%, 12% down. It doesn't feel like it. It doesn't feel like it, right? If we're being honest, when we look at the sentiment out there, when we were even just at 39, 38 a couple weeks ago or last week, whenever that was, but that's where we are, and we continue to make a series of higher lows. We continue to get price acceptance above a key psychological level of 40K. And, you know, look at these ETFs. They are just soaking up, what is it, 3% of the Bitcoin supply in a few weeks? And that's amazing. That's amazing to me. When and if and when we break over this 44,769 region, I expect all-time highs in a week, within a week and a half, within 2 weeks. I'm not going to make any qualms about that. It's my belief. You all know I've got a very aggressive forecast, but I just see new highs coming really, really fast. I think the market is still expecting this to be tied to the halvening. And once that 48 level, that halvening, pre-halvening, you know, 618 retracement that everyone's kind of looking at, that gets nullified, I think money flows back into this pretty quickly. So that's kind of my approach on that. Let's take a look at what am I doing here? Function F11. There we go. Let's take a look at another chart. Let's take a look at this chart. Okay, this is just a daily chart, low time frame, that just kind of goes into a little bit more detail on exactly what we've been dealing with since December. And what have we been dealing with? I mean, we're literally at range highs. Let's take this. We take this deviation, right? We had a couple deviations. But the range has been established. I've got volume by price, these bars that you see here. So by price level, where the most amount of volume has been traded, and this point of control line, this is the average where the highest amount of volume has been traded, 42,425. And so we have been, to me, this is a screaming accumulation, vertical accumulation structure, where we are, again, residing at the high end of this range. If you take these kind of 2 deviations out of the range, and that's bullish. That's bullish. Now, if we were hovering under this, you know, this huge volume area that comes all the way down to 41,977, if we had been kind of, you know, just hanging out under there, that'd be a little bit concerning. That'd be potentially more you know, more warranted to think that more downside is coming. But as the structure looks to me, that's just not the case. I also pointed out, I did a post a few days ago, all the way back to our lows where we broke out of the cloud, the Ichimoku cloud, onto the downside, reclaimed it the next day, and that's only happened four other times. And each of those 4 times, the aggregate gain was about 49%, and on average 11 days. So we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days into this. And what's our average gain here? Certainly isn't 49%, but it isn't negative. And it most certainly is positive. And so we're right at around 12%. We're right around 12%. And that aggregate gain, folks, was till Bitcoin hit its local top and then started a little bit of a downtrend. So we won't know if this is a local top until more price action follows it up. So that's what I wanted to share with this chart. Let's look at Mara. The Mara weekly chart is looking good. I mean, I think I did a video a couple weeks ago where I talked about this important level. I wanted to see it flip quickly. This level, this triangle, this line that I'm kind of drawing, I wanted to see it flip quickly. And we most certainly aren't over it, but we aren't under it anymore. And if I really zoom in on the weekly close, we closed higher than this minor 1 subwave 5 peak with our close today. So just above it. And we do have an uptrend as I'm kind of visualizing just local price action. What do we have here? We have a higher high, we have a lower high, right? Higher high, and now an established, excuse me, higher high, higher low. And this is the second green week. And so that's again what you want to see. That's what I want to see. So for Mara, so far so good. Continue to expect, and all the miners, if this in fact this 2 is in, which I believe it is, then the expectation would be for the third, the subwave of primary 3, sub 3, to be the most powerful. That's what they are, folks. So, looking at, let's just look at what that same wave did back in 2020. And again, it passes in any guarantee what's going to happen in the future, but in a similar location and time, Mara went from 207 to 1472 in 1, 2, 3, 4, 5, 6, 7 weeks. So things can get moving fast with these names, most certainly, if in fact the way that I've got this visualized and counted is correct, which I believe it is, but we're not going to know until the market reveals that to us. And so what's bearish? What would be bearish would be next week, a red week, a close under this 1709 area. That's bearish to me. Like that wouldn't be a good look. I want to see continuation. I want to see continuation. The markets, the traditional financial markets, are all cooperating. The environment is there. So a break of that trend line and a close under that level wouldn't be a good look. Just being honest. All right, last chart is Bitcoin measured in the Nasdaq. And as we're seeing Nasdaq go into price discovery, I think it's important to look at Bitcoin's relationship against the Nasdaq. The Nasdaq is essentially, in my opinion, the risk asset proxy for traditional finance. And the way Bitcoin denominated, divided by the Nasdaq, measured in the Nasdaq, has performed in the past isn't necessarily a guarantee for what's going to happen in the future, but we do see a lot of rhythm in that relationship. And going back to 2017, we saw a pronounced downtrend, right? We have a high, established pivot high, a lower high, a set of lower highs. And then we have, these higher lows, these higher lows. So basically price compression against the Nasdaq, and then that energy released in the direction that it came in, right? So kind of this massive just, pennant structure. Let me get rid of all those lines. All right, so what do we have going on today? Well, we had the energy release, and then we had, again, consolidation against the Nasdaq, getting tighter and tighter and tighter and tighter. Energy released, but a little bit more consolidation against it. Kind of like you saw at around this area here in the fall of 2020. Prior to resumption of the primary trend. Okay, this is the key here for me. Is what was a primary trend that was established? The primary trend that was established when these higher lows were, or lower highs were broken, was continued trend movement in the direction that you came into the consolidation. Okay, and so we came into this consolidation in an uptrend. We're breaking out of it, and we made a new higher high. Okay, that's the key. This is the break in the market structure. Higher high, higher high. And so my expectation here is a continued breakout against the Nasdaq. That's the expectation. Will it come to fruition? We're going to find out. But again, the key piece of the puzzle in these equations and the entire thesis is, and I've been asked before, can Bitcoin, go to all-time highs without the Nasdaq? I don't think so. Without the traditional financial markets, I really don't think so. Not yet, not now. Maybe sometime in the future. But the most important part of the thesis is markets going into price discovery, entering, this blow-off phase, which appears to be happening right now. And so that's the first most important step. And so, folks, that's it for the video. Sorry if I rambled a little bit longer. I was trying to keep this a shorter video, but I haven't chatted with you in a while, so I decided to give you a few extra minutes back. Have a great rest of your weekend, and take care, and we'll talk soon.